I'm Phil Middleton. I have the pleasure, the honor to be the chair of the OMFIF Digital Monetary Institute, and I've seen it grow from a tiny little group to what it is today, with over 200 people physically here and several thousand joining us from around the world online. So welcome to everybody, and I have to say it really is fabulous and slightly strange to be back in a physical conference environment. It is a great pleasure. The coming session is grandly titled Stablecoins, CBDCs, Tokens, and the Role of Public and Private Money in Europe. So my panel has got an enormous amount to get their teeth into, and I'm very glad that it is an expert panel. And in alphabetical order by surname, they are, for my far left, Piero Cipollone, who's Deputy Governor of the Banca d'Italia, and amongst other achievements was an advisor to a Prime Minister of Italy, so very well concerned with policy and practice of monetary policy. On my left, I have Doris Dietzer, who is head of digital finance, payments, cybersecurity, amongst other things, in the German Federal Ministry of Finance, and has been an advisor to the Minister of Finance himself. So very much in the heart of Europe's largest economy, and if our data and polls are to be believed, the one that's most skeptical about giving up its cash. I also remember it was slightly skeptical about giving up the D-mark as well, so be interested on that. We then have, from representing the non-euro areas, Anko Shombati, and I apologize if I get that wrong, who's the Chief Digital Officer and the leading light in digital transformation and CBDC within the Central Bank of Hungary. And last, and certainly no means least, Bazar Toprak, who's head of coin systems, deposit tokens, and various other interesting digital things at JP Morgan, and indeed very much in charge of operating the Onyx project. So delighted to see you all, and thank you very much for joining us. Before we get going, we're going to put up a slightly provocative audience poll, and I would if my support acts were throwing it up, but the poll says, when will the use of cash finally disappear in the majority of European countries? So when will we stop using cash in Europe? And you have some options ranging from within the next 5 years to never. We shall show the results towards the end of our deliberations. As the previous session, can I encourage you to ask questions either by submitting them electronically through the app. You've got a question function there, and they appear here on my tablet or on the screen in front of us, or indeed in the old traditional manner of putting your hand up, and we'll get a microphone to you. So, resorting to my plan of strictly alphabetical order, Piero, I'm going to start with you. Last night we had a fascinating dinner where we were addressed by your compatriot and indeed former colleague, Professor Angeloni, who was informative and intriguing, and shall I say at best dubious about the possibility of a digital euro in short order, and in fact suggested that Frankfurt might well be waiting to see what everybody else was going to do before making a decision. What's your view from a Banca d'Italia perspective?
Well, yes, is it working? First of all, thank you for having me in this important panel. Going directly to your question, Frankfurt at this stage is doing the technical work. We all know that this is issuing a retail CBDC is a very complicated and difficult task, fraught of difficulties, many trade-offs to solve, many dimensions which are completely unknown since we are the first democratic area moving in this direction with this. So really the ahead of us is fraught with difficulties. So at this stage, we are preparing the machine in case you will need it. So my reading of the discussion of last night from Ignazio was, okay, it's a wise thing to start preparing the machine, but at this stage, he didn't see the need for putting the machine on the road. Whether the machine has to be on the road or not, it's not for us at the technical level to be decided. Has to be decided the politician, which at the end of the day will have, by setting the rule within which the digital euro will have to act, they will say whether this is going to be on the road or not. My personal point of view is a little bit more, I would say, optimistic in the sense that from my specific point of view, I already see business case that need to be urgently addressed throughout Europe. Let me mention some. Remember, we are talking about one central bank or one system of one central bank, which is one bank and 20 national central bank and 20 treasuries and 20 politicians plus the European level. So the decision-making process is pretty complicated. We are trying to put together so many different economies. And despite the fact that we have one single common currency for 23 years, there is no single payment instrument in Europe that will unify us. So if I am in France and I want to pay, and my PSP is based on Belgium, I have to pay with a technology and a solution which is not European-based. And there are not so many of those solutions. So you wonder what kind of competition you get. Who is going to pay for the price of this oligopoly? Ask the merchant if you want an answer. Ask them. There are business use cases which are not completely addressed. Think about e-commerce. If you want to buy something with e-commerce, you cannot rely on domestic scheme. You have to rely on, again, on American technology. Think about peer-to-peer payments. If I want to send some money to my son, which is in a different city, you cannot do right away. There are only two countries that can do that. Spain with Bizum and I guess the Netherlands with the Ideal. So to me, those are business cases that need to be addressed immediately. Since we have been, and there is a market failure, there is no question about that. We have this solution for 20 years. I mean, we have the single currency for 20 years. No solution has emerged. To me, those are compelling reasons to go ahead as fast as possible.
I mean, we're hearing from the ECB and other central banks that from a technocratic perspective, this is possible. There are some practical questions, but essentially technically, intellectually, it is possible. And the central banks are now in many countries saying, now we're going to pass it over to the politicians. What in your view, is going to happen within the EU in Europe? Who is going to make this decision? Is it the Commission? Is it the European Parliament? Is it national governments? Is it a referendum? How's it going to work?
So I'm not a legal expert, but I'll tell you what I understood. The European law has to set the frame. Let me give specific examples so we understand each other much better. For example, can a digital euro enjoy anonymity? I mean, the fullest level of privacy. This does not depend on a technical decision from the ECB or the Euro system, this is just a matter of software. Depends on whether the politician will, the European law decide that there is an electronic payment, because at the end of the day, this is an electronic payment that can be exempted from the AML law that is in force in Europe today. As, for example, can digital euro enjoy a legal tender status? This is not a decision that can be taken by the euro system. It's a decision that has to be made by the legislative authorities. There will be a mandatory acceptance for the merchant on this. This is not for the ECB to decide. Can a PSP refuse to onboard somebody into the? That's for the political level body to be decided. However, those decisions obviously will weigh very much on the way you will implement the digital euro. So this, at the end of the day, the extent to which digital euro will become the cash of the digital euros, which is what we are trying to implement at the technical level, will depend on this decision, which are at the political level.
What I'm hearing here is that the people aren't really going to be involved here. Aren't really going to be involved here.
Well, I mean, those are decisions. People can make their voice be heard. I mean, you know, next year there will be an election in Europe, the European level, and there are elections every day. So one way or another, people, and they can be, and we are consulting people constantly. We have a market advice group that advises us about what the industry thinks. We conduct surveys all the time. In fact, we know that one of the things that people care the most is privacy, for example. Privacy first, security second. We have a focus group to hear what people think. We are constantly listening people because we want this project to be a success. It's not just a technocrat, it's something that has been devised at by a group of people sitting at the ECB. We want to be a solution to a real problem.
Thank you. An appropriate moment now to turn to Doris, because the support of Germany and the German people is going to be absolutely crucial if this is going to work, isn't it? What's the view from Berlin?
Yes, thank you very much, first of all, for having me again. If I look on today's conference, I think it perfectly reflects the growing interest in the topic, which is wonderful and necessary. Your question, what is our view on the topic? Of course, we are following quite closely the work of the EZB, which started 2 years ago on the digital euro. And there's a constant exchange also in the Eurogroup and the European institutions on that topic. And as Piero already now said, there are some parts of the project which are decided by the central banks or the EZB, and there are some parts of the project which have to be decided in a democratic process, how I would call it. And you perfectly mentioned some of them. And I think that's why the European Commission already announced a legislative proposal on the digital euro, which she wants to publish in June this year. And I think it's going to be highly interesting to see, and then this proposal gets picked up by the council working groups, where the member states are presented and gets discussed there. And in parallel, it gets discussed in the European Parliament. And I think one interesting point will be whether the European Parliament will pick up this proposal during its current period, or whether with regard to the elections next year, it will wait and the next Parliament has to deal with it. So, with regard to Germany, of course, it's already said before, we tend to be skeptical, as you put it, or in the panel before, it was also mentioned that there's somehow the legend that we have this cash affinity, which is nearly unexplainable for everyone. However, if you look at the numbers, you can see that, yes, Germany has a quite high cash usage. However, compared in the European, also with regard to other Euro member states, there are some member states where the cash usage is even higher than in Germany. That's also part of the truth here. With regard to the project, I think it's very important to view cash and CBDC together. Because if it's supposed to be both, it's both central bank money. It's probably both going to be legal tender, and we have to make sure that one does not come off the cost of the other. And I think that will be one of the most important challenges for the co-legislator, the European one.
And when do you expect it, do you think?
I think there's going to be a lot of things to discuss and debate until we have a final view on that. And at the end, I think it's on the society itself to decide how much cash they will use, and think it's necessary, because that's part of the trust in central bank money.
Can I ask you to just talk to us a little bit about this privacy question has come up repeatedly. A number of speakers have said, look, one of the major features, the major benefits of cash is the anonymity of it, and people are concerned about the lack of privacy. And indeed, research that OMFIF's done and G&D particularly have done in Germany show this massive amount of resistance on this point around privacy, which I find a bit strange in the sense that citizens in Germany as elsewhere willingly give all kinds of data to Meta or Amazon or Aldi or even their bank. Why is there this, and indeed if there's any institution in Germany I would trust, it's the Deutsche Bundesbank. Why are German citizens so averse to this?
We trust the Deutsche Bundesbank as well. I'm not sure whether that is really a typically German issue, because when I talk to my colleagues from other member states, we do see that we have a similar discussion, for example, in the Netherlands at the moment. I think the privacy issue is linked very much to the trust issue, and it has two different perspectives. The one is how much data, or whether I'm willing to give data to a central authority like a central bank. I think the ECB made quite clear that it has no interest in the payments data of consumers or users of a retail CBDC. And there's the second part of it, how much am I willing to give my personal data to another private company or to a bank? For whatever reasons, also maybe for anti-money laundering and CTF reasons. That is a different question. And if you look at that, of course, we do see that there is also a kind of need for privacy, or at least a certain degree of privacy for certain payments. Comparable to cash, one can also argue how private cash is at the end. However, and there we are facing the discussions, or it will be interesting to see whether CBDC is more compared to a cash and an anonymous cash payment, or whether it's more compared to an electronic payment. So, and we see, or I could expect that we may see something in the middle. Because it could also be an option to say, well, CBDC could have a higher degree of privacy than existing electronic payment services, it means. And then we have highly to debate with the co-legislator how private it can be in the end and how cash-like it could be in the end.
And doesn't that, in a sense, give up some of the potential advantages of a CBDC, whether we're talking about smart money, programmable money, whether we're talking about better and more real-time data for regulatory and supervisory authorities? I would imagine that the German finance ministry would love to get real-time transaction data on certain sectors of the German retail economy. Should we compromise because of this, or should we think about how we persuade citizens that actually there's nothing to be scared of here?
Privacy is a very important issue for us also from a policy level. And with regard to CBDC, you really have to ask the question, what is the added value and what it is for? And there you can have different perspectives. And I think at the end, one have to decide which one prevails. From a consumer perspective, of course, you can argue probably no consumer in Europe is waiting for another digital payment service. They have things they can pay, and they may have an interest in a more, may have an interest in a digital payment service which has a higher degree of privacy. But in the end, there's for them, they are able to pay everywhere digital. However, if you look from the merchant's point of view, they may have an interest in a CBDC because it can impact and lower their fees. Fees are quite high. As you mentioned, we have kind of market challenge here on that side. And the Commission already tried to address that as well with other regulations. If you look at industries, we see a high demand actually in programmable payments. I think it's very important to distinguish between programmable money, which is something which, in my opinion, would clearly affect trust in it if we would touch on that, and between programmable payments, where you offer the possibility to introduce your CBDC into an programmable process. So, and there's a demand there. We see that in industry. We do see, I found it quite interesting what the colleague from Brasilia said, in wholesale CBDC, in the financial industry. However, that's something the ECB is currently not focusing on. So to come back to your questions, I think it depends how you weigh the added value of a CBDC. That will be the anchor to then also focus your communication and further steps in it.
And interesting, this morning, the Brazilian Central Bank announced that they're pursuing an exploratory program with Visa to look at programmable money for certain categories of agricultural trade, which presumably will also yield a certain amount of data to the Brazilian Ministry of Agriculture. Edgar, can I turn to you? Hungary, not in the euro, but very much in the EU. Are you preparing for a digital forint, or how do you see things from Budapest?
So, first of all, thank you for the invitation for this superb event. And indeed, as almost all central banks, we are also exploring the possibilities for issuing a central bank digital currency. And for the moment, we don't see any imminent need for a large-scale retail CBDC to be introduced. But this doesn't prevent us from not making experiments and small pilots that put users on the front and where we are actually having real use cases to be implemented. Just to make an example, one of our already running project is called Digital Student Safe, And there we are aiming at the digital financial inclusion of primary school year students, so in the age of 8 to 14, and their parents. So we are offering them a gamified platform in the form of a mobile application where they can fill in quizzes and answer them, and they are rewarded with actually digital stamps or dollars that can be later redeemed in a retailer, so they can give real, they can win a real present on the one hand, but also the platform also embraces real money. So we in Hungary actually already issuing central bank digital currency for real users in the form of e-money. And this platform teaches us how to deal with the customers, what the convenience need is, what the central bank security need is, how to fulfill all these requirements. And also we have to know all the possible vendors who can work with us on this project, but still it's a small controllable scheme, doesn't affecting the reputation of the central bank itself, and therefore we can prepare for the later big bang and shorten time to market, which in a technology term still very long, but as we have heard at the introductory speech, also in a public consultation form, it also needs a very long lead time to convince the customers that we are offering them something valuable. So therefore, we would like to remain in the forefront of CBDC research, and our platform is really modular so that we can embrace further functionalities, further ledger technologies to test and experiment in a live environment.
I tried to go and participate in your quiz, actually, and win some prizes, but unfortunately it's all in Hungarian.
For the moment, yes, but we are working
so
on the English
please
version.
Can we have an English version? But it's very, very interesting, and of course, interestingly similar to half a dozen years ago, the Estonians introduced a digital euro commemorative physical coin set. Where a €1 coin was being sold for 30 euros, which prevented any arbitrage really between the real thing. Hypothetically, if we get a digital euro, where does that place Hungary? Well, I mean, will you scramble to produce a digital forint? Do you join the euro?
So actually, all the central banks are exploring CBDC issues for considering other central banks, and especially the smaller economies are afraid of the dollarization concept as well. But the digital euro or digital dollar itself wouldn't accelerate anything that wouldn't happen anyway. So that at present we have a fully convertible currency. Anyone can use euro nowadays for savings, even for payment purposes in main retail stores. But still the adoption of euro is not prevalent in Hungary. So our citizens truly believe in our local currency, and therefore we serve their needs in both fiat money form, and also want to give them access to pay electronically via the instant payment system. But still there is some gap here. So we have approximately 13% of the adult population who do not have a bank account yet. So there could be a place for the supplementary functions of a CBDC, like financial inclusion, and in the digital age, it has to be a digital financial inclusion, where we are serving these customers. And So in considering CBDC, you first have to identify your motivation based on either a severe market failure or a very strong policy objective that you would like to follow. And then all the further design steps dependent on this specific decision. So in Hungary, we see that probably this digital financial inclusion can be a strong motivating factor, or to support the further innovation of the financial market participants. And therefore, we probably need to give them a modern public platform for this innovation.
So you don't anticipate as a policy objective then phasing out cash in the very near future?
So cash is a really strong brand of our central bank. So it represents that the public has a trust in the central bank and in the Hungarian economy overall. And so our job is to provide possibilities of different forms of payment, but we, from the central bank, cannot determine what the public will use or would like to use.
Thank you. Let's move then on. You lead us very nicely into thinking about other forms of payment. And that may in the future include forms of payment that don't come from central banks at all, i.e. private money and different kinds of private money, which may not necessarily come from banks. And we've been talking about the JPM Onyx project, which is wholesale money with some retail elements in there. And delighted to welcome one of the leaders of that, Vasek Toporak from JP Morgan. Can you tell us some more about it and tell us very much how you see this almost private money playing within a digital public landscape?
Sure, thank you. Onyx is a business unit under JP Morgan Payments, and we focus on how we can transform and kind of re-architect the way we process payments and move money, information, and assets around the world. So one of our product lines is called JPM Coin Systems, and it's essentially a blockchain deposit account. So it's bank deposit, but it's on the blockchain ledger. Obviously, our existing ledgers are not blockchain, but we see that there is a lot of benefits of actually placing our deposits on the blockchain. It's our private permissioned blockchain, so it's only available to JP Morgan clients, and the use cases are institutional payment use cases. So with this kind of live product that we already have, we have seen that our clients have benefited from this 24/7 movement of money across blockchain deposit accounts, across borders. And this is used in multiple use cases, including cross-border transfers, but also on our intraday repo platform. And this is one of the use cases where we talk about delivery versus payment. Really, you need to have the cash equivalent on the blockchain where you also have the assets, for example, tokenized US Treasury bills. So these use cases, we've seen that our clients and participants have already benefited from these types of commercial bank money being on the blockchain. So it's a blockchain-based account structure. But extending to token form, we see that there are more opportunities for the token form of commercial bank money to be represented alongside CBDCs, for example, wholesale CBDCs. This space obviously has been filled by stablecoins right now in terms of private money, and we think we should elevate the discussion around commercial bank money also being represented on the blockchain to facilitate these types of use cases that I talked about.
But what is the difference between the JPM coin and a stable coin?
So JPM coin is a blockchain deposit account. So it's not a coin. It's not a stable coin. It's not a cryptocurrency. It's basically subject to the existing depository frameworks and minimum requirements, et cetera, that we have today. So it's a bank deposit. It's a JPM deposit claim. So we provide the account structure on a different type of technological infrastructure as opposed to legacy systems. So that's the only difference. So it's not a one-to-one backed type of money form. So it's the same money as in commercial bank, it's just represented in a different way.
But it's an IOU against JP Morgan, basically.
It's a deposit, so demand deposit claim.
Deposit,
that's
yeah.
right, yes.
Demand deposit
yes.
claim.
Yeah.
And what advantages is this offering over the current systems that one can see?
Sure. So our current systems are, not 24/7. We obviously have real-time payments coming, but they have limits. And Piero mentioned, even though there are possibilities, it's still difficult to establish peer-to-peer payments. The structures that we have today are very much banks having their own ledgers, right? So you have accounts, and then you have payment rails. And then you have different banks, they all need to connect through these payment rails. I think from a retail perspective, actually, if you don't see what's happening, the spaghetti behind the, behind the walls, for retails, there are a lot of patchwork solutions. To us, real-time payments are there and possible, but institutional use cases are harder, and banks and fintechs have this patchwork of solutions behind the scenes where they still need to move money most of the time, not in a very efficient way. So that's the landscape that we think can be enhanced by the use of blockchain technology. And the move is not going to happen overnight, but we believe that we need to start working on it. And we don't necessarily need to wait for central bank digital currency to arrive. Commercial banks can take steps towards creating use cases and opportunities for commercial bank money, which is the dominant form of money today, to help with these use cases.
But that sounds to me very much like you're not creating a new form of currency.
That's right.
You are simply making, well, simply, you are using emerging technologies to make existing banking that much more efficient and secure and faster and so on and so forth. So can I turn panel then to the question of perfectly private currencies? We had Libra DM, which for various reasons didn't see the light of day. Let us say that a major global technology company with an established ecosystem, a user base of several billion people, and a massive great balance sheet decides to introduce a token, let's call it the pineapple token, for using within that system. What do you think the authorities are going to say? Piero, can I start with you, please?
Well, I don't know what they are going to say. Certainly they should be worried. For one fundamental reason. Because then, what would be the advantage of merchant to price the goods, the local currency? If you have a token, which is called whatever, you can spend that throughout the world. You don't have, as a merchant in Europe, say, you don't have any incentive in pricing your goods in euros. Because if you price those goods in the currency we were referring at, in the token, you could sell it to the old clients of the technology firm we were referring at. So you immediately expand your client base from Europe to the rest of the world, which means that the bread will be priced in the currency you were referring at. How do we do monetary policy in that case? Basically, what you are saying is that the monetary policy for the world will be run by a private company. I am not sure we want to be in that world. So I don't know what they are going to do. They will certainly do something. Certainly they should be, I mean, the monetary authorities should be worried about that.
Right.
I don't know whether I answered to your question.
Well, no, I'm just speculating that if I'm running this ecosystem that I've got a couple of billion users, and they want to talk to each other, which they do, and they'd like to send money to each other, which they do. Not necessarily go into shops and use this, but they would like to send value. For example, migrant worker remittances. I mean, $700 billion of migrant worker remittances. At the moment, arguably, they're very inefficiently moved to the disadvantage of the migrant workers and indeed of their countries. And if the Middleton Phone Company can say, look, I'll tokenize these and call them pineapples and move them around the world, and I'm going to charge you 10% of what current payment companies do. Isn't that a great advantage in terms of financial inclusion and efficiency?
I mean, as long as it not stays at a monopoly power, because once you are in as a client, it's very hard to get out. We all know the story of walled gardens, right?
Of walled gardens, yes.
So once you are in, they might lure you in with the lower price or whatever, but once you are in and you are stuck, then it's much more difficult to revert back because those are network effect industries. So you might have a huge monopoly around the world, and then who knows what the price will be of the services. So I don't know. But I am kind of worried about solution like that. We can achieve the same without reinventing new tools. I mean, if we connect fast payment system around the world, there are 56 or 60 jurisdictions that do have fast payment system. There are ways to connect those. There are experiments going on right now. The Nexus, for example, be one of it, which are trying to connect fast payment system. We did an experiment. The Eurosystem did an experiment with, for example, connecting TIPS, which is the fast payment system in Europe, with the fast payment system of the, say, Buna, which is the fast payment system owned by the Arabic Monetary Fund. We managed to have a transaction in 15 seconds. So we simulate a transaction from an Italian bank to the bank in Jordan in 15 seconds. It's a matter of, you know what the big impediments are now? It's regulation. It's not the technology. It's the fact that you have different legislation, different AML regulation. Those are the really blocks on the road. So it's not simply a matter of technology. It's a matter of regulation. And we have the technology to improve to make much more efficient the transfer right now. We have to solve the technology issues. We have to solve the regulatory issues. So make regulatory such that you can transfer money from one country to another without too much trouble in terms of legislation, AML, know your customer legislation, which are different across countries. That's where you spend time and money.
Right.
More takes on the same question?
I was going to say more takes, because presumably if I launch my pineapple, JP Morgan or other people in the private sectors are going to think, there's a business opportunity here. You're not going to let me have a monopoly, are you?
Yeah, I mean, the thing is, I think there's different aspects to this, and regulatory aspect, right? So presumably it would be some sort of stable coin, right?
Yes,
yes. So it has to be one-to-one backed or
yeah, I've got gold in the Federal Reserve.
Exactly.
And I've also got gold in the Banca d'Italia. It's all.
Yeah. So and we published a white paper on deposit tokens recently, and in there we talked about if stable coins were to grow and scale so much, and this was looked at as part of Libra. there weren't enough government short-term securities for Libra to be backed. So there will be stretch, definitely. And that's why we think one-to-one stablecoin model is not the way to scale, right? We need to have a different model, and that's where we think commercial bank money, in terms of how it's operated today, and part of credit intermediation is kind of the right way to go. So I think the financial model of it will be key. The other aspect would be, we're in a rising rate environment, and not paying interest will be a problem. And then the regulatory landscape, we're not going to have a globally standardized regulatory framework around this, so it will take us time. But these are definitely, great questions for us to think.
Theoretically, it's not impossible, and you're right that the availability of adequate asset backing, particularly bonds and so forth, will limit supply, unless you go down a fractional reserve banking route, for example. So bank lending isn't constrained by reserves at central banks. There's a multiplier effect, and we're seeing now what problems that can cause. No, I'm not getting any backing here for my statement point.
Well, your pineapple token really sounds quite similar to the DM token, especially if I remember rightly. The use case you just mentioned was the major use case they introduced or put forward when they introduced their plans to issue a Libra or dime. So I guess the reaction from a policy side would be quite similar to the one back then, and that was a quite impressive one, because within a very short time we saw basically the major Minister of Finances from the G7 countries which issued statements that money, of course, should be in the hands or should stay a public good and not be privatized in that way. And it also was a kind of wake-up call, I would say, back then, because, of course, it showed us quite clearly where there are shortcomings in the existing international payments system. And you already mentioned them. When it comes to international payments or from a European perspective, payments outside the euro area, we are still relying on a corresponding banking system, which is not the most efficient one. And I think that is something we got quite obvious when the plans back then got published and introduced. And it had some follow-ups which are still on the agenda, because since then we have this topic discussed on international levels, in the Financial Stability Board, in working groups. They are still developing and discussing standards for global stablecoins, for crypto assets worldwide. This is highly debated there due to the events back then. That is why I think from a policy side, the topic is on the agenda, and we do see where there is room for improvement in the current system. That is, for example, why the Commission published the proposal on instant payment, for example, to have a 24/7 or year possibility, at least for euro payments, to get transacted and settled. And that is why a lot of work is still done there. With regard to your private company issuing global stablecoin, it's furthermore also a question, where do we want to concentrate power? That's a question of competition, but also at a certain degree, it's a question also compared to state or public authority power compared to private ones, and how do we want to balance that?
But we do permit private monies at the moment. If I go and play a multiplayer online game and I want to buy a magic sword, I'm using in-game currencies, which are completely private, I mean, yes, they're sometimes fungible with fiat, but these are private worlds with private currencies. Why would I not extend that if I am I don't know, a major supermarket that I want to create a club for my customers and offer them discounts for using this, the pineapple token within the supermarket? Why are we saying, as a matter of principle, that we're not allowing private currencies apart from
yes, indeed.
bank?
Of course, we already have a coexistence of public or central bank money, commercial bank money, and e-money. That's already on the market, and I think it's therefore, but they all have to adhere to certain rules. So that's the first point. So that is why we have the European Union quite banking regulations for these things, and that is why every company and which would offer such services in the European Union would need to apply to them as well. Whether it's a traditional bank or whether it's another kind of enterprise. But however, I think your idea goes beyond regulation and beyond private and public money and or commercial money. It's, I think, at first a question of competition, concentration of power.
But we have competition regulators
yes,
to look at that.
Yeah.
And payment providers don't necessarily have to be banks. Indeed, many of them aren't.
Indeed. So actually, just referring back to the concept of e-money, this is under the European regulation, the equivalent of a stablecoin scheme, so that you have to have one-to-one backing of your electronic money in the form of a commercial bank deposit. So therefore, your idea has to be actually regulated, because your customers at the end want to redeem your pineapple coin for ordinary euros or pounds, and therefore someone has to guarantee that you can pay your promise and you will be able to cover it anytime in any quantity. And so unfortunately, if you fail with your promise, all your customers will come to the central banks and demand some compensation, and then we have to explain to them that, sorry, you were contracting with someone on the market without any license, and why do you think that that we would be responsible for your bad choice?
But it has happened. I mean, in Kenya with the M-Pesa mobile phone network, the unit of account is mobile phone units. And in terms of non-banked citizens, particularly in the rural areas, instead of using the Kenyan shilling as a unit of account, they were using telephone credit units. On mobile phones. You go to the local cigarette store, you buy some mobile tokens, you're using those as effectively a private currency. So why wouldn't we scale that up?
Actually, as far as I know, they also became regulated
providers. I'm not arguing for getting rid of regulation at all. I'm just questioning why, if we don't get a digital euro, we might get a digital something else.
I think it goes back to Aniko's point about converting it to real money, right? So if that is not provided, then you don't provide the singleness of the money, right? And then the user of that token is taking the risk of the issuer. So it's a direct risk. And I mean, cryptocurrencies are the same as well. And there is volatility involved. It's not the same as our fiat currency.
But currently, theoretically, if I have I have 200,000 euros in a euro area bank, and that bank goes bust, I lose half my money.
Yeah, it's the credit risk of the bank.
Yeah.
Yes, and then there is deposit.
There's the credit risk of the pineapple company.
Money anyway.
Beg your pardon?
That's private money anyway.
Yes.
Commercial bank, your deposit in a commercial
Yeah.
bank.
Well, yes, it is private money. It just happens to be in a regulated bank.
Well, the issue is the fragmentation. The issue is if you have several private money which are not interoperable among themselves, you have a huge problem of fragmentation because depending where you are spending your money, you have to translate. You have to have some money there in that specific platform. If they don't speak each other, you are stuck. So your liquidity is spread throughout so many, the many DLT or whatever solution you have. That's why you need a central solution. I'm sorry. So that's why you need some central solution that allows some sort of interoperability, which is the public money in the digital form.
And do we believe that the ability to issue fiat currency is actually the ultimate expression of sovereignty?
I don't know.
The deep question.
Yeah, I am not. But I should think a little bit, at least a week before being able to answer that question, since we don't have
What
time.
do you think, Philip?
Well, in the old days, you had to have a flag and a national airline, and these days it seems to me you probably do need a sovereign currency to. I don't think it inconceivable that in the future we will have a tapestry of electronic currencies, some of which will be fiat and some of which won't be. I'm just looking to see on our poll results, and which the question, if you remember, was when will the use of cash finally disappear in the majority of European countries? Well, it's up there on the main screen as well. So within 5 years, 4%. Within 10 years, 23%. Same number for 20 years, and half our audience think cash will never ever disappear in Europe. You surprised?
No.
No. I'm not either, because I think there is very, very strong social pressure to retain cash. It's known as the Phil's mum test. And Phil's mum has always said, so tell me, how does this CBDC thing do better for me than the bit of paper with a picture of Her Majesty on it? And Phil can never quite explain. So so long as we can't explain, I think cash will be with us for a long time.
So just to jump into this.
No, please.
If we think about cash, we actually can differentiate between transaction type cash and accumulation type cash. So what we are thinking about in this room probably is the transaction type cash, and for the accumulation type, this is what we have actually witnessed during the COVID, that because of all uncertainty about the economy, about how the life will go on, the accumulation type cash started to be increasing, and actually in Hungary the cash issuance of the central bank has peaked during those years, but this didn't mean that people were not taking up all the electronic means of payment for everyday life. They just felt the uncertainty. And actually, these days when the inflation hit and bites everyone's savings, then people are reducing their cash amount and converting it something interest-bearing. So you cannot foresee any linear trend in cash usage. There would be always some influences.
And indeed, in the UK during COVID, there was a lot of cash put in shoeboxes under beds. We've come to the end of our allotted time. Thank you very much indeed. I'd like to thank Piero Cipollini from the Banca d'Italia, Doris Dietzer from the German Federal Ministry of Finance, Adiko from the Central Bank of Hungary, and certainly last but not least, Vasek Toprak from JP Morgan. Thank you very much. Thank you for your kind attention wherever you are.